Hello, today is Tuesday, September 11th, 2007. This is Brian Shannon speaking from Alpha Trends Blogspot. The market's closed. S&P 500 did close with a gain of $1.69, I'm showing. So that's up 1.23%. And volume was a little bit lighter today than it has been the last 2 days. But again, like I like to say, the only thing that pays us is price. And if you were short today and you lost money, it doesn't matter if you lost money on big volume or light volume. The fact is you lost money because the market went up, and that's the only thing that pays us. The market has been showing actually, this is pretty encouraging. We do have some higher lows in here. So far, we didn't get a complete failure at this level. The market made it back up above the 200-day moving average today. But I think that we're going to have to see the market climb at least past this level right here near 150 before we can start to really get bullish. I still believe that overall over the last month or so that we're more stuck in this neutral range, and that it's going to remain a trader's market. I still am concerned about the bigger picture here represented on the weekly time frame, but that's not going to help us make money in the short term. What we need to look at is the short-term trends, because that's where the money is made. Now, some people were seeing this inverted head and shoulders pattern on the over the last 3 days today. It did break past that level and back above the declining 5-day moving average in here. The declining 5-day moving average tells me that maybe we're going to chop around a little bit more in here, but it is good to see that it's back up above this level, this 147 area, and as you can see, and more clearly even when we go down to, for instance, the 2-minute time frame, that late in the day we did get some sellers coming in try and panic people, but the buyers were able to get it back up above that level. So the market held on bullishly and closed right up near the highs for the day. So here's the 5-minute time frame showing this little resistance over the last 2 days being support. So there are some encouraging signs in here, but again, this environment favors short-term trades and day trading, and that's the way I'm going to continue to approach the market, based on technical analysis, not on any big fundamental events, because we can't time our decisions based on fundamentals. When it comes to fundamentals, it's good to be aware, for instance, last Friday of the employment numbers, but to try and place a bet based on those is not a good way to, you're basically betting on the market. So we'll continue to follow what the market is telling us, looking at the information, and as I've said before, as I've said consistently since about right in here, that we have to be in we have to be aware that we're in a higher risk situation because of fundamental uncertainties overall in the market. But it's a trader's market, and you need to keep your analysis short term, and the best way to study the market on a short-term basis is through technical analysis. And that's, again, obviously the focus of this blog, which is why I call all my videos technical analysis review of the market. So let's take a look then at the semiconductors, because they've been having trouble the last couple days with the 50-day moving average. Last Friday they broke down below that level. Now they continue to be stuck below it, but encouragingly, we've got a rising 10 and 20-day moving average, and it also remains above the neckline from that inverted head and shoulders pattern we've seen. So for now, it's looking like this is our third higher low over the intermediate term, and we do have this higher high. So it's looking a little bit more encouraging. In other words, if you look at the semiconductors here, you can see that let's take a look at a 5-minute time frame, that they didn't bounce quite as much as the S&P 500 at the end of the day, but they did bullishly remain above that 5-day moving average. But the 5-day moving average is still declining, so we might still need a little back and forth action before the buyers can really gain control. And I think that it's encouraging to see here that it made it back above this level. This is the level I pointed out to yesterday. Actually what I had said was 38.10 to 38.20, and we're kind of stuck right on it. So it could go either way here. We just have to remain very cautious. The volume was heavier here late in the day, and there was net selling at the end of the day. So again, just more reasons for continued going slow in this environment, and making sure that you're managing risk and controlling your share size. The IWM also, it remains in a primary downtrend, looking at this 50-day moving average declining and below the 200-day moving average. It's still, this market did make a lower low, so it gives us more reason for concern. The volume was lighter today. It did bounce. It made it up to the $78 level. That was the level I had identified yesterday as saying that it's going to have to get at least above $78 a share before we have any chance of a recovery, or at least another test of this 80-20 level. And it's still not convincing that it's above that level. We cleared it by a couple pennies, but that's similar to calling this a legitimate breakout over here. So we have to be real cautious in here. I think breaking back below $77 a share, that puts a lower low on this market and invalidates this very short-term uptrend. So again, just risk management. Be very careful in here. The Qs have, like I've said, have been the more resilient market here. They've shown more strength than the other markets. They were able to climb back above on a closing basis above this 50-day moving average today. It did. We did see that this neckline was tested, and it's moving higher once again. So on the 10-minute time frame, we're right in this critical area in here as well. We've got a 5-day moving average that's declining, so it's still just a trader's market. I went home flat today like I did yesterday, and I'll probably continue to go home flat in this environment, or if I'm going to be holding overnight, it'll be very small positions, in particular if there is a fundamental event that might potentially change people's perceptions of the market. So just keep on your toes, keep your share size smaller than you might normally trade when we have a clear view of trend, but it remains risky.